Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
I'm Professor Code, and this is the Forex Super Model weekly review for Monday the 14th of the 12th to Friday the 18th of the 12th 2020. Basically, we're going to conduct a variance analysis on the modelling. So we're going to look at what actually happened versus what we expected to happen. So I've written all this stuff out earlier to save time. So let's make a start then. So this is Monday the 14th, Tuesday, Wednesday, Thursday, Friday. So and these are the complex flows for each day. So if we look at Monday the 14th, then you can see that the pound was the negative unopposed driver, and we've got activities on this side as well. So the activity level was plus or minus 110 on Monday. So on Monday we had people rushing out of the pound pairs, and then the opposing positive flows were going predominantly into the euro, slightly less into the dollar, and the rock was the yen. So we had pound weakness on Monday, with euro strength, dollar strength, and a bit of yen strength. Now, what we've basically been saying all week on our market daily briefings is we've been suggesting that to go long dollar yen, euro yen. So the reasons we've slightly changed the approach here this week is because we've pretty much stayed constant throughout the week, recommending long dollar yen, long euro yen. So in other words, we've been expecting yen weakness and dollar strength and a bit of euro strength against these yen pairs. Now, that isn't the whole story, obviously, because we split the complexes down. If you look at the daily briefings, you'll understand what I'm saying. So anyway, that was Monday. Activity plus 110. Then on Tuesday we had a complete swing around where the pound was the unopposed positive driver, and then you had all these opposing negative flows, primarily coming out of the dollar and the euro next, with the yen static at -4. So you had this sort of reversal effect. Now if you looked at Monday's briefing, we suggested that a negative unopposed driver in the pound was either a floor or it was the start of a ramp down in the pound. Now we suggested it was a floor, and so we called the pound weakness the pound strength for Tuesday reasonably well, but we'll talk about that a bit later. So, and then Wednesday we had the dollar acting as the opposed negative driver at -118, with the positive flows going fairly equally into the euro and the pound. Thursday, the dollar was the negative opposed driver, and with the positive flows going into the euro and the pound again. And finally, Friday, the pound was the negative opposed driver, with the positive flows going into the dollar and the euro this time, predominantly the dollar. So let's make some sense of this and put it into context in what we were saying during the week then. So if you look at here, I'll move out the way here, these are the weekly flows as a total. So these are the individual daily flows for the complexes, and this is the whole week as a whole. So as the week as a whole then saw the dollar being the negative opposed driver at -356, and the opposing positive flows going into the pound and the euro, with the yen in static equilibrium at -3. Now, in terms of activity levels during the week, we had plus or minus 110 on Monday, 308 was Tuesday, was the big one where we had the pound strength, plus or minus 146 on the Wednesday, and plus or minus 212 on Thursday, and plus or minus 122 on Friday. And over the week we had activity of plus or minus 387. So that's quite an overview there for you. Over the week, in terms of pairs, the euro yen actually went up 38, so arguably that we're on the right side of that, but the dollar yen went down 71, giving us a net deficit of minus 33 on the two pairs. So let's make some sense of it then. So we were expecting throughout the week, we're expecting yen weakness off the back of a rising equity market transmission. Now, we got the rising equity market, so we got a tick in the box there, but we didn't get this negative yen transmission through the flows. And the reason being, if you look, that the yen complex throughout the week on each day is the positive or negative rock. And the rock is the complex which moves the least. So its net positive and negative flows sort of buffer each other out. So this was the problem we were facing this week in terms of selling the yen, was that the yen was acting as the positive or negative rock. So on Monday it was the positive rock, Tuesday it was the negative rock, Wednesday it was the negative rock, Thursday negative rock, and Friday negative rock. So whilst it was trying to weaken, it just wasn't happening, because we were getting opposing positive front and backdoor flows coming in, and the only times you don't get backdoor flows is when you get unopposed drivers. So from Wednesday we were getting this push me pull me effect on the yen complex, and if you look at over the week as a whole, the yen on activity of 387 for the whole week only actually moved minus 31 points in terms of complex moves. So it really was locked in, the yen, and that was the problem with our suggestions for the week, in that long dollar yen and long euro yen. And if you were watching the price action as we were during the week, you could just see that it was every time the dollar yen particularly tried to move upwards off the back of negative equity transmissions, as equities came up, it was very soon knocked back down, and so there was a very strong set of dynamics there which were hindering our suggestions. However, on a brighter note, we got out of our fairly long-term or medium-term positional trades. We had 38 pound long trades at 20% long, and we got out on the Thursday just before the rates announcement from the Bank of England. And we got out for a good healthy profit overall. We got 4,295 points approximately profit overall, plus and minus on the account. So that was good news. However, the swing trades were less impressive, and obviously they're more likely to be, but than the medium-term positional trades. But anyway, that was our situation. So to sort of round this up, we were expecting pound weakness after we had this pump up on Tuesday, and we actually got this pound weakness to a certain degree, but over the week the pound was actually this positive secondary driver, and we didn't really get this pound weakness until the Friday. We started to see pound weakness, and the other thing, as I said, was this yen situation where we're expecting yen weakness off the back of positive equity flows. We're also expecting dollar strength. Now dollar strength again didn't appear till later, very late in the week really. Friday, the dollar was the positive secondary driver at plus 88. So everything was quite lagged and messy as far as the flows were concerned. And then the euro, we're expecting euro strength. And we got a little bit of euro strength, to be honest. And if you look at overall, the euro did strengthen up, the yen did weaken, but the dollar was soft pretty much all week, apart from this little buck up on Friday. So that's where we were. Arguably, remember, throughout the week we've been saying that the German data has been strong for the last 2.5 weeks, and that transmission of German data as opposed to EUR data as a whole was playing very nicely through the DAX. The DAX was on the up pretty much all week, and ended up rising 4% or more, and it came back a little bit on the Friday. But the DAX as an equity index was sensibly following the script, if you like. We weren't trading the DAX, but logically that would have been a sensible long, given the scenario of currencies and the fact that we've had outsized German data for about 2.5 weeks. So that was an interesting point. So overall, we'd have to give ourselves a neutral to small negative in terms of the actual daily flows, but in terms of the overall picture, we're quite happy, and we're now actually out of all trades, and we have a blank book. We don't always do that at the end of the year. This is just the way it's worked out this year. It just seems sensible to chop the pound trades, and then we just got rid of the short swings just to clear the decks. So we're going to, as I said, we're going to fire up the daily reviews on Monday, the 4th in the new year, which is the effective start of the standard sort of trading week. So look out for the daily briefings from Monday the 4th, and in the interim we're going to be knocking out educational style videos on technical analysis, trading psychology, and what have you. So I hope this has been useful, and I hope to see you again soon. Thank you.